And welcome back to Forex Scope, your trusted source for in-depth Forex analysis. Today, we're diving deep into the exciting world of GBPJPY, bringing you insights on the 15-minute and 1-minute timeframes. Get ready for some actionable trade signals and a glimpse into potential future price movements. If you're not already subscribed, hit that subscribe button now and ring the notification bell so you never miss out on our market-moving analysis. Let's get started. The support zone is identified around the price range of 200.818 to 200.869, spanning from the timestamp 176-236-5600 to 176-236-6500. This area demonstrates a period of consolidation and testing of lower price levels. Specifically, the candle at timestamp 176-236-5600 shows a clear low of 200.818, acting as a floor. The subsequent candle at 176-236-6500 also tested this lower boundary with a low of 200.818, indicating significant buying interest and rejection of further downward movement. The range between 200.818 and 200.869, encompassing a high of 200.918, shows multiple price points interacting, suggesting a potential area where buyers might step in to halt a downtrend. The candles within this timeframe exhibit characteristic lower wicks, signaling attempts to push prices lower but ultimately being met with buying pressure, thus forming a discernible support level. The price action here suggests a pause or potential reversal point where supply has been absorbed by demand. The resistance zone is identified around the price range of 201.025 to 201.094, specifically between the timestamps 176-236-2000 and 176-236-3800. This area shows a clear ceiling where upward price movement has been capped. The candle at timestamp 176-236-2000 reached a high of 201.094, indicating a point of selling pressure. The subsequent candle at 176-236-3800 also encountered resistance, with its high reaching 201.025, further confirming this upper boundary. The presence of significant upper wicks in this zone suggests that buyers attempted to push prices higher, but were consistently met with strong selling, preventing further upward progress. The price action within this range, from a high of 201.094 to a low of 200.993, demonstrates a struggle between buyers and sellers, with sellers ultimately prevailing in pushing the price back down from its peaks. This repeated rejection at similar price levels signifies a robust resistance zone, acting as a barrier to any further ascent in the short term. The support zone is identified between 200.951 and 200.969, covering the period from timestamp 176-236-4040 to 176-236-4580. This area demonstrates significant price action characteristics. Specifically, we observe multiple instances where the price tested these levels, indicating a potential floor for buying interest. The presence of several candles with long lower wicks within this range suggests buyers stepping in to defend these prices. The accumulation of trading activity, characterized by relatively tight price movements and multiple touches, points towards a well-defined support level where demand has historically overcome supply, leading to price reversals or consolidations. The price has repeatedly found buying pressure around this zone, with the lowest price reaching 200.925 and the highest price within this period touching 200.983, demonstrating the area's ability to hold price. This zone shows a clear characteristic of price testing and bouncing back, indicating strong buyer presence. The resistance zone is identified between 200.988 and 201.006, covering the period from timestamp 176-236-8840 to 176-236-9000. This level represents a significant barrier where selling pressure has historically emerged. We observe instances where the price struggled to break above these levels, with candles showing substantial upper wicks, indicating that sellers were actively pushing the price down from these higher valuations. The price action within this range shows the market consolidating or experiencing downward pressure each time it approaches these values, suggesting that the supply is strong in this area. The highest price reached within this defined period was 201.025, while the lowest price observed within this zone was 200.896, underscoring the area's effectiveness in capping upward price movements and creating a ceiling. This resistance level has been tested multiple times, with the price failing to sustain higher levels, confirming its role as a significant selling point. The Fibonacci levels indicate a potential upward bias as the start of the Fibonacci sequence, 200.972, is lower than the end of the sequence, 201.006, suggesting a bullish outlook. Observing the recent price action and tick volume, there's a period of consolidation and testing of resistance levels. The Bollinger Bands are narrowing, indicating decreasing volatility, but the price is currently trading near the upper band, hinting at upward momentum. The previous resistance at 201.006 and the new potential resistance identified around 201.094 suggest that if the price breaks through these levels, it could surge higher. Conversely, the identified support zones at 200.869 and 200.951 will act as crucial levels to watch for any potential reversals. The current price of 201.024 is just below the immediate resistance, implying a possible test and break of this level, followed by further upward movement towards the next significant resistance. The zigzag pattern anticipates a push higher, testing the resistance at 201.050, followed by a minor pullback to 201.030 before a stronger upward move towards 201.060, then a slight retracement to 201.040, and finally aiming for the higher resistance at 201.080. This sequence reflects a market testing its upper boundaries with potential for a breakout, driven by the underlying bullish sentiment suggested by the Fibonacci retracement and the current price positioning relative to the Bollinger Bands and identified resistance levels. The high tick volume in some of the recent candles also suggests active trading interest that could fuel further price discovery.